Imagine a mutual fund that doesn't rely on human fund managers, emotions, or guesswork, but instead uses artificial intelligence to analyze millions of data points and make lightning fast investment decisions. Sounds futuristic, right? Well, that future is already here. In today's video, we're diving deep into AI-based mutual funds, how they work, how they compare with traditional funds, and the best AI-powered investment options available in India right now. Artificial intelligence is transforming every part of our lives, from how we shop to how we drive and now how we invest. Mutual fund houses and asset management companies are beginning to tap into AI's potential to make smarter, faster, and more data driven investment decisions. These funds don't simply follow market trends, they learn from them. They continuously adapt using real time data, market signals, social sentiment, and even predictive analytics. So, the big question is, can AI really do a better job than experienced fund managers? And should you consider adding AI based mutual funds to your portfolio? AI based mutual funds are investment vehicles that use artificial intelligence, machine learning, and advanced algorithms to manage portfolios. These funds are not just tech themed funds, they're driven by actual AI models that assist, or in some cases fully handle, decision making processes like stock selection, entry and exit timing, portfolio balancing, and risk management. Here's how they work in practice. AI models ingest huge volumes of data, not just stock prices and financial ratios, but also unstructured data like news articles, social media sentiment, earnings call transcripts, economic reports, and even weather or geopolitical trends. Using machine learning, the system identifies patterns and correlations that human analysts might miss. For instance, if certain types of language used in earnings calls historically correlate with future stock declines, an AI system might detect that trend and act on it instantly. These models are adaptive. That means they don't just follow static rules, they learn over time. If a particular sector starts behaving differently due to macroeconomic shifts or changes in consumer behavior, the AI adjusts its models accordingly. It's like having a fund manager who never sleeps and continuously improves based on every market tick. In India, while we don't yet have fully autonomous AI funds like those in the US, several mutual fund houses are incorporating AI in the backend, for example, to filter stocks based on predictive signals or rebalance portfolios dynamically. Others, like Mirai Assets Global XAI ETF FOF, invest in AI focused companies globally, giving you thematic exposure to the AI revolution. So, whether it's strategy optimization, risk analysis, or sentiment tracking, AI is quietly becoming a powerful co pilot in mutual fund investing. Now, let's compare them with traditional actively managed funds. Traditional mutual funds rely on experienced fund managers who track company performance, talk to CEOs, read reports, and make decisions based on their judgment. This method works, but it also brings human emotion and limitations into the equation. Fund managers can miss trends, overreact to news, or stick too long with underperforming stocks. AI based funds, on the other hand, are purely data driven. They make decisions based on logic, not fear or greed. They are quicker to react, they don't sleep, and they can process more information than any human ever could. However, they are not perfect either. AI models can sometimes misread market signals, overfit historical data, or underperform during sudden black swan events like the pandemic. And many investors still feel more comfortable knowing a human is in charge. So it's not about which is better, it's about which suits your investing style. Let's now talk about the most popular AI based or AI themed mutual funds in India that are making headlines in 2025. One of the most well known is the ICICI Prudential Technology Fund. This fund invests in Indian tech giants like Infosys, TCS, and HCL, companies heavily involved in AI and automation. It's delivered a solid CAGR of over 21% over the past 3 years. Then there's the SBI Technology Opportunities Fund, another sectoral fund with a strong focus on automation, machine learning, and data driven companies. Its 3-year returns hover around 18%, making it a consistent performer. Quant Technology Fund is another name worth mentioning. This fund takes a more aggressive approach, investing in companies involved in cybersecurity, IoT, and digital infrastructure, the building blocks of AI itself. It has shown nearly 20% CAGR over the last 3 years. If you are looking for global AI exposure, the Mirai Asset Global X Artificial Intelligence and Technology ETF FOF is one of the best options. This fund invests in a US-based ETF that holds stocks like Nvidia, Amazon, and Alphabet, the world's AI leaders. It delivered a jaw-dropping 35% return last year and has more than doubled since its launch. Another global option is the Nippon India US Equity Opportunities Fund, which taps into the AI wave in the US market with similar holdings in companies like Meta, Microsoft, and Google. For those interested in broader global indices, the Motilal Oswal Nasdaq 100 4F is a passive fund that gives you exposure to tech-heavy giants riding the AI trend. It's returned about 20% CAGR over the last 3 years. And don't overlook the Parak Parikh Flexi Cap Fund. Although not an AI fund on the surface, nearly 16% of its portfolio is invested in AI-focused companies globally. This gives you indirect AI exposure with the comfort of a diversified portfolio. Let's talk about the pros and cons of investing in AI-driven funds so you can weigh them clearly. On the positive side, AI-based funds bring unmatched speed and efficiency. They process millions of data points faster than any human analyst. They are emotion-free, meaning they don't panic during market crashes or get greedy during rallies. And because many AI funds are tied to tech and innovation themes, they often offer high growth potential. But there are trade-offs. These funds can be volatile, especially since many are heavily concentrated in the tech sector. AI itself can also misread market trends, especially during unprecedented events. And many of the models used by AI funds are like black boxes. We don't always know why a particular decision was made. For some investors, that lack of transparency can be uncomfortable. Also, AI-heavy international funds are affected by currency fluctuations, foreign market risks, and global tech regulations which may not apply to Indian equities. So while the opportunity is exciting, it's important to go in with a clear understanding of the risks. So should you consider investing in these AI-based funds? If you believe in the long-term growth of AI, automation, and digital transformation, these funds give you a thematic way to ride that wave. They're especially useful if you want to diversify beyond traditional sectors like banking or FMCG. That said, remember, these funds can be highly volatile. Most of them are concentrated in the technology sector, which can experience sharp ups and downs. If you're a conservative investor, you might want to allocate only a small portion of your portfolio to these themes, maybe 10 to 15%. But if you have a higher risk appetite and a long-term horizon of 5 years or more, these funds can offer excellent returns while aligning your investments with the technology of the future. AI-based mutual funds are not science fiction anymore. They're very real, and they're growing in both popularity and performance. Whether it's Indian tech giants or global AI leaders, you now have a range of options to choose from. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and leave a comment below. Are you planning to invest in any AI-based funds this year? Thanks for watching, and as always, invest smart, invest safe.